Welcome back, everyone. This is Thomas Triple T Tie with another new bullish crypto analysis. Before we dig in and take a look at the macro news that may impact the market, remember this is for edutainment only and not to be considered as financial advice. Additionally, please help spread my simple to understand analysis to others, especially newer people or people who may be more experienced but may just lack the analysis part. Who just doesn't want to keep up with the news on their own. So with that, you can do that by smashing the like, ringing my bell, hitting subscribe if you haven't, and sharing your thoughts in the comment section. That really helps with the YouTube algorithms. All right, so with that, let's dive in and take a look at the macro news. I already did the charts this morning as far as the trend charts and stuff. But the reason I'm showing you again is because of this move right here. As you know, the FOMC meeting has already ended, and they at around 2 p.m. Was it 2 p.m. or is it around 2 p.m. Pacific Standard Time or 11 o'clock Eastern Time. The Fed, they announced a 50 basis point. Okay, so if you look here, this one is right around 9, 10, 11, 12. Actually, 11 was it? I think it was 11. Yeah, 11. It was 2 p.m. Eastern Time, 11 o'clock Pacific Standard Time. So this is when the news came out that the 50 basis point was in place. That's what they're gonna do. So cool. But guess what? It was Bitcoin was dropping, and the stock market was pretty much right there. You see how the stock market was barely rising right here. You can see the Nasdaq, S&P, and the Dow. They were just like waiting, and then all three shot up. Look how Bitcoin shot up straight. This one, all three indexes here shot up straight. It wasn't the 50 basis points. Some news article said it was the 50 basis point. It wasn't, and I'll tell you why. So let's take I'm gonna close this out. So remember that timeline around 11 o'clock. Okay. Here's a zoomed in view of just Bitcoin. Here's notice the time below down here. This is roughly around 11:40. So the 50 basis point is not it because it already came out at 11 o'clock. So right here, this is trading view on a 5-minute time frame. Here's 11 o'clock. The news came out about 50 basis point. Guess what? Bitcoin actually did. Bitcoin actually dropped after that. It dropped until 11:35, but something happened at 11:40 that caused Bitcoin and the equities market to pump. Guess what it was? Okay, I'll tell you. Let me save this and move this out of the way. This is where why the market pumped. So let me enlarge this so you can have a fantastic view, and I hope you can hear it. Let me put on my headset here.
Steve Leisman, CNBC. Thanks for taking my question, Mr. Chairman. You talked about using 50 basis point rate hikes or the possibility of them in coming meetings. Might there be something larger than 50? Is 75 or a percentage point possible? And perhaps you could walk us through your calibration. Why 1 month or one meeting should we expect at 50? Why something bigger? Why something smaller? What is the reasoning for the level of the amount of tightening? Thank you.
Sure. So 75 basis point in an increase is not something the committee is actively considering. What we are doing is we raised.
That was it. That was the reason why the market pumped right in that time frame. It was when the market just shot up, and it was because they are taking more hawkish or more aggressive rate hikes in the future off the table. So it looks like 50 basis point is what they're gonna the most hawkish they're gonna be. So yeah, the market liked that. So it was more because the 75 basis point was off the table, not because of 50 basis point. So I hope that was
Is
a
50
valley
basis
for
points
you.
today.
Let me move this out of
we've
the way.
said that, again, assuming that economic
go.
and financial conditions evolve in ways that are consistent with our expectations, there's a broad sense on the committee that
all
additional
right, let's
50 basis increases
take a
should
look
be
at
on-
the news
50 basis
and
point increases should be on the
oops,
table for the next.
I think it's still playing. Sorry about that. So let's go back here. Let's take a look at the rest of the news. I gonna end that so that it doesn't play accidentally. So AMD sales jumped 71%. I talked about that this morning a little bit. They shrugged off concerns about PC slowdown, so good for them. And the Dow surged here's an article that pretty much backed up my point. The Dow surged 900 points, S&P 500, Nasdaq jumped as power discounts, bigger rate hikes. So this is one of the article that got it right. A record 4.5 million Americans quit their jobs in March. So we're going to take a look at some data. Friday is when the non-farm employment numbers come in. So keep an eye on that. But basically, this data pretty much shows the U.S. labor market remained on fire in March with a record 4.5 million workers quitting their jobs. New data from the Bureau of Labor of Statistics show on Tuesday. The number of quits increased most significantly in the professional and business service sector, as well as construction. The overall quits rate moved up to 3%, to a level not seen since December 2021. You probably want to know why. Well, I mentioned this, I think it was yesterday or before as well, but people are used to, having the flexibility of staying at home and working from home instead of having to be stuck in traffic, getting to work and getting home from work. And they like the flexibility of just the comfort of home, and getting the same job done. So you can see here, as employers who require workers to return to the office, quits are ticking upwards. Major reasons for quitting is to find remote opportunities. This is huge. And if companies don't learn to adapt to how to balance a hybrid work environment, they're going to be struggling. Right now, there's roughly 1.9 jobs for every person that's out there. Think about that for a second. Roughly 1-to-2 ratio for every person that's available to be to work. There's roughly two jobs available for them. Could man, I hope this is not playing because I hate it when they play. Could rising home prices make the Fed tightening even worse? Let me check to make sure it's not playing so that it's not annoying you guys. Okay, good. And this basically is about, with rise in home prices and the rise in interest rate has cooled off the real estate market a little bit. But if prices for homes continue to rise, that means that it's gonna. The Feds might use that as a reason for tightening even more. But you already saw that they're not going to be more hawkish than 50 basis points. So that makes this article pretty much mute. California governor issues executive order on crypto as state embraces blockchain technology. This is huge. California is like a country to itself. Huge amount of people there. So, and it's also, California tends to be more democratic. They're more a blue state, and the fact that they're looking at embracing blockchain technology, that's good for the market as a whole. Typically, what I see is that more conservative or red states tend to gravitate towards crypto more often than the blue states. So this is really good news for crypto. I really don't care about blue or red states, but I do care about crypto. No, I hate this. Anyways, Bank of America gets fined $10 million for illegally taking payments from customers. Just like the bank just keeps appearing in the news about cheating customers, doing something illegal, and then yet, the focus is on the crypto market and how bad it is. These are heavily regulated banks, okay, like big time regulated, and they're still committing fraud and cheating people and the market and stuff like that. So, according to CNBC, private payrolls increased to 147,000 in April. This is well below the estimate, and this is according to an ADP report. And if you didn't know, ADP is one of the big payroll companies that help medium to large or even small companies with their payrolls. So they have a good dial in on the data. The expected estimate was 390,000. So that's a significant drop. And that's a decline from March, where they saw 479,000. But I would caution this. I would wait until the Friday numbers, because I believe it was March or February, where ADP's number came out, and it was significantly different than the actual federal Fed numbers. So use this as a gauge, but wait for the Friday numbers. So you're probably wondering, okay, what does this mean? Well, that's okay. When private payrolls increase, that means that there are more people working. Because more people working, more payroll. If the number decreases below expectation, that means that there are more people quitting than there are more people quitting. That's why they have less payroll. Interesting article from the Daily Beast here, and it wasn't just the Daily Beast that had this similar article, but it was about Russia and how intercepted phone calls from Russian military personnel citing that they were deceived. Some of them refused to fight. And the story goes on and on about how they think this war is ridiculous and they just don't want to fight. And some just literally quit. And so, yeah, it's just reinforces the morale in the Russian army and how terrible it is. They said that most of their equipment don't work, like 90% of their equipment don't work. The leaders don't know what they're doing, and sometimes the leader are not even there. So the minute fighting breaks out, the leaders run away. And so just one extremely dysfunctional military group. I mean, just Russia. I mean, Russia alone. U.S. relief as China appears to a heat warning on Russia. This basically, if you remember, back when the invasion first took place, China was, and they still haven't really said that the invasion is illegal. They pretty much somewhat supported Russia as far as in the news or in the public. But this article talked about how they haven't done much more as far as supporting Russia with money or military equipment, etc. So at least that we don't know. At least that we know of. So that's good, because if China gets in there, it gets really messy, and that's gonna create more sanctions with China, and the global economy is gonna go into the toilet even more. So this one may not impact the market as you think, but I think it's important to keep an eye on these kind of situations. Sony reportedly refused Chinese government's demand to scrub Statue of Liberty from the latest Spider-Man movie, and this is about there's a scene in let me magnify this up so in case you want to read it. Close out. There's a scene in the Spider-Man movie where Spider-Man was standing on the when Tom Holland, he was standing at the top of the crown of the Statue of Liberty. Well, they wanted to erase the Statue of Liberty. They didn't want that to appear in the movie because of the symbol that it represents. And then when Sony said no, they're like, can you darken it? Can you make it less prominent? And Sony said no. And so, but why is this important? It's important because a lot of foreign companies do business with China because of the size of their market. And if you want to grow your business, like Tesla or Sony or others, you kind of have to work with the government, and their government is a bit special. So like take for instance Tesla. Tesla has a prominent presence in China. So Elon is buying Twitter. Now, can you see the connection there? Like China could go to Twitter or Elon and say, hey, could you do this? Could you do that? Could you do that? So it's not a direct impact on the market, but the actions behind the scene could impact the market. If you can control the communication channel, like the world's town square on Twitter, imagine what you can do. According to CNN Business, EU proposes ban on Russian oil imports this year. Hungary says no. This is pretty much approved. So the EU, they are on board along with Germany, which was a major country that kind of was very hesitant. But they're on board, and they're gonna wean off of Russian oil. This is just oil, not gas. Big difference. To wean themselves off completely of Russian oil, and they also sanctioned Sberbank from the SWIFT system. So that's good. And they're still dependent on gas, though. So the reason why this is important is because you can sanction Russia, but if you keep paying them for for energy, well, you're just literally giving them money to be able to do more military BS stuff, invade other countries and rape more women and children and kill more civilians. So it's a balancing act, and they got to figure a way to get rid of the gas dependency as well. But they are talking about making some exceptions for countries that are in the EU to be able to allow them to continue to be dependent on Russia for oil. EU, this is according to Reuters, EU says considering more military support for Moldova. And if you haven't been keeping up with the news, Moldova, there's been some fightings in Moldova because part of Moldova territory is pro-Russian. And so if Moldova gets invaded, then you can see this whole Russian invasion stuff starts to grow. And if you look at World War II, how did Hitler start invading Europe? He started a tiny bit at a time. And so I think by the EU looking to support Moldova so they can fight that out of the territory to prevent further Russian incursions, and that would be more proactive. So keep an eye on Moldova. And of course, Russia said, yeah, they're not gonna attack Moldova, yada yada. Like they didn't attack. They lined up over 100,000 troops along the border of Ukraine and said, oh yeah, we're not gonna attack them. I think there's something wrong with Russian water or food or something. Okay. According to CNBC, risky fourth straight rate hike expected from Bank of England as inflation soars. So, like I said before, the U.S. is not the only one. Other countries are facing inflation, and their central banks need to take a look at what they need to do to navigate the high inflation. And this one is from the UK here. So they're looking at increasing their rate, similar to the U.S. They're going to increase it. Their third hike in a row, and they're taking the bank rate up about 0.75. So, and the market expected 25 basis point increase from 1%. And so, yeah, it's like you got to take things as a whole, because all these different economies impact each other. And so it's important to cast your perspective on a wider view and include other countries. So, yeah, so their inflation rate at the 30-year high, we're at a 40-year high. They're at 7%. We're at 8.5%. And remember, these inflation numbers, they're kind of cooked. Real inflation number, I would argue, it's really like at least 2% higher than what these numbers say, at least. And I would argue that it's around 3% higher. So, I usually take 2.5%, for example. If the U.S. is 8.5, you take 2.5% of that. So, 2% is that 16. Take another 0.5% of that. That make it 4.2. So you're looking at over 20% for the U.S. inflation, like real inflation. Also, one of the topic I cover consistently is COVID and Omicron. So newer, fitter descendant of Omicron variant began to drive their own coronavirus waves. And this is important whether you believe in masks, whether you believe in vaccination. That's neither here or there. That's your personal choice, and that's cool. But it's important to keep an eye on this if you're investing, is because if more people get sick or more people die, there'll be less people working. There'll be more people staying home taking care of their kids. And so that's going to impact the economy. What impacts the economy is going to impact your investments. So cases are reporting, like in my area, cases are going up 30 to 50%, depending on which week you're looking at. And in multiple states, they're going up by more than 50% compared to the previous week. So in Washington, Mississippi, Georgia, Maine, Hawaii, South Dakota, blah, 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 they're like going up 50%. Or more. And that's scary. So infection, and that's what's even more scary is that, and I don't mean scary as in scary, but scary as in from a perspective of investment. Because the testing now that we have now is we have less testing and not as good reporting. So with these numbers being where they are, I think the real numbers are actually higher. So keep an eye on this. I think there's another article about California that's coming up here. Here's another one. In New York, fifth wave in New York, COVID hospitalization tops 2,000, nearly tripling in a month. And so hospitalization is when we get infection, like people take a test and they're like, oh yeah, I'm infected with COVID. Okay, that's that happens. Life happens. Just like the flu, for example, we get sick. But when people get hospitalized, that gets more serious. Because now, if more people get hospitalized, we'll go back to the stage where we lack ICUs, we lack proper medical equipment to deal with the overflow number of people getting to the hospitals, and then death rate increases. So hospitalization and death rates are two factors you really want to keep an eye on. So here's New York, one of the most dense, popular urban area in the U.S. So yeah, that's not looking good there either. I think that's one for California too. Here, yeah, this is the one here. be zoomed in for you. This article from San Francisco Chronicle. CDC forecasts COVID deaths to rise for the first time in months. And now we're talking about death rates, okay? So that's serious. I'll zoom in for you. As COVID-19 case rates tick up across the Bay Area in California, San Francisco and Santa Cruz counties reported the highest rates of coronavirus infection in California so far this week. The Bay Area saw a 167% increase in coronavirus infections in April. The same month that California dropped most of the COVID mitigation measures, like mask requirements on public transit, etc., etc. So whether you like masks or not, masks do do want to wear it, and that's up to you. If you don't want to wear it, that's up to you. Depend on the law in your local area. But don't be surprised if you see more states or counties going back to requiring masks for indoor events or places, because I have a feeling that it's gonna get worse. It's not. Yeah, because you probably also wondering why are a lot of blue states, removing the mask mandate and being less strict on COVID measures. It's because they have midterm election coming up, and they need to win some of those polarizing people over to be able to secure that election, and to me that's why. So be thoughtful of what's going on with the COVID situation and how it could connect with the larger picture. According to AP News, North Korea fires ballistic missile amid rising animosities. Okay, here we go. This is Putin's little brother here, same family of craziness. They once in a while they like to, flex and launch some ballistic missiles. But this creates fear and anxiety in the Pacific, the local region, and if they, if their nuclear programs get even more developed, that's even scarier. So we're dealing with multiple crazy people in the world here. So. Right now, this kind of stuff right now doesn't impact the market as much. But later on, if it gets serious, there's development about their nuclear program progressing further, that will have an impact. I think I talked about this article already. Yeah, that pretty much covers the news. I hope you enjoyed it, and if you did, feel free to help spread the analysis to others, and smash the like, ring my bell, hit subscribe if you haven't, and also share your thoughts in the comment section below. I appreciate your time, and I'll see you in the next video later today. That next one is Bitcoin. So see ya. Peace.